So, what do a credit downgrade, presidential tweets, and retail giants have in common? Well, they were all in the mix on Wall Street yesterday, and the market still managed to hold steady. Hey everyone, it's Tuesday morning, May 20th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. All right, let's get into it. The stock market yesterday managed to squeak out some gains. The Dow Jones was up about 0.3%. The Standard & Poor's 500 barely stayed above water but extended its 5-day win streak. And the Nasdaq ticked just slightly higher. Now the big headline? Moody's downgraded the U.S. credit rating late Friday from AAA to AA1. Their reasoning? Rising deficits and growing concerns about refinancing U.S. debt with these higher interest rates. That brings them in line with Fitch and S&P, which had already pulled top-tier status. But guess what? Wall Street didn't panic. Bond yields initially surged, with the 10-year flirting with 4.5% and the 30-year even poking above 5%, levels we haven't seen since late 2023. But by the end of the day, yields pulled back. Meanwhile, the tariff drama isn't going anywhere. Treasury Secretary Scott Bessent made it clear, if trade partners don't negotiate in good faith, those sky-high Liberation Day tariffs are coming back. He said the U.S. is focusing on deals with 18 key partners. And Trump? Well, he called out Walmart on social media, telling them to eat the tariffs. That follows last month's spat with Amazon about passing tariff costs onto consumers. Now looking ahead, this week's economic calendar is light. We've got some manufacturing numbers and jobless claims on deck. But the spotlight shifts to retail earnings. Target and Home Depot are both reporting this week, and investors will be watching for any signs of pressure from tariffs and consumer fatigue. So, Moody's hits the U.S. with a downgrade, tariffs stay in the headlines, and markets? They still keep climbing. At least for now. That's it for your Capital Markets Quickie. I'm Endrit Cela. Catch you tomorrow morning.